Hi, it's Phil at the Laptop Trader channel, again on YouTube. Welcome back to our community. Again, I'm here to share my experience and give back to the stock investing and trading community, one video at a time. Again, we're going to cover market cycles, stocks and ETFs, technical analysis, trade entry, trade management, risk management, and how to create confidence by putting the odds in your favor. So good luck. My email contact if you have questions or comments, laptoptraderphil@gmail.com. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for informational purposes only. Please seek qualified help if you need help investing. So on this channel, we recommend start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets. So for April 2025, this is our laptop trader agenda for the month. We're going to go over a market review and the forecast for April and May. Next topic, using price and volume and patterns on the chart to see the emotions of the market. Money is neutral, but people operate on emotions and logic. We can use this to our advantage when people apply their emotions and ideas to the market because we can see it on the chart. This market since mid-December has not been working for my personal trading plan and my style of trading. Recently in March, most all of my trades failed or stopped out. A few worked. So what is a trader to do? The short answer is reduce risk, reduce position size, and or take a step back and stop trading for the short term, reassess the situation, and then re-enter when conditions have improved. This will happen to all traders at some point, also known as a drawdown, so be prepared for it. Different traders have different styles and different plans. Some people are contrarian traders, and this may be a great time for them, and that's just the way it is. But this is a great time to study the markets, even if you don't have a lot of capital, because bear markets happen, and they all have a little bit different theme, and some are short in months, and some are much longer in months and years. But this is a great time to be watching and be prepared for the next move up. I would recommend creating a watch list for yourself of companies you're interested in. And for my investor friends, it's a great time to stay the course and keep investing in your retirement plan or mutual funds in dollar cost average into the market at lower prices. So with dollar cost averaging, essentially when the market's going down, you're buying your mutual funds at lower prices, and then when the market turns up, you get the advantage of that market turning back up, and you don't have to time the market. One company from my watch list this past week on Wednesday, Thursday, and Friday had huge gains all of a sudden. So there's a chart and the company of the month for you to study. I will reveal that company at the end of this video and why I think it is an important one to study. So from here on out, I'm going to go to more of a live presentation. We'll get away from the slideshow. Please cooperate, computer. Yeah, let's get to some live charts here. So I'm just going to use this drawing tool. And so this is S&P 500 ETF SPY, which basically measures the market and gives us a chart of recent price action. So let me just click on a highlighter here, a drawing tool, and I guess we'll just use black for this. Anyway, we could see that since December, right, mid-December, this market topped out. We had this red warning bar, We had an attempt to go higher that then failed. We had a second attempt that failed. We had a third attempt that failed, and then the market rolled over. Okay, I think that should be pretty obvious for anybody to see that. And if you've been watching the markets, you know that we're in this bear market. Market's down, I believe, over 10% at this point in first week of April 25. Here was an attempt to rally, but then rolled over in a very strong way. We've got these major gaps down. So here, price moved up, closed here. The next day gapped down a significant way and closed lower because it's a red bar. So price opened at the top, closed at the bottom. And then on Friday, same thing happened, right? We just hit a new low here in the market over the last 9 months. So let's see if I can delete that annotations. Let's see. Be frustrated to use some of these tools sometimes, but let's just do. Oh, here's delete annotations. Anyway, all right. So now let's talk about the forecast going forward. So this could be this very strong move down over this week, past few weeks, could be the bottom. We have no idea if this is the bottom or not, but many times this could be a capitulation where there's so much selling going on that people that want to buy all of a sudden see this as kind of a buying opportunity. So on Monday, Tuesday, Wednesday is this upcoming week. We could see, maybe a green bar like this. Just imagine this is a green bar that does something like that. That would be called a reversal bar. We could also see at the beginning of the week a bottoming tail bar, which would indicate that price opened here, was sold for the first part of the day, first half of the day, and then by the close, prices were moved back up and left this bottoming tail bar, otherwise known as a shakeout bar. Okay? And this tail on this bar, or this wick on this candle, indicates demand. Okay? That would be one possibility early in the week. And it could come in many different forms. It could come in, like I said, it could be a reversal candle where it's green. It could have a bottoming tail bar like that, something like that. And then maybe the next day we get, an inside bar or a candle. We could have some red candles in the beginning of the week. We could have more selling, right? But depending on how this all plays out, would give us the information we need to determine, is this the bottom? Are we getting near a bottom? We won't know probably for the next few weeks, would be the short answer to that. But again, we could have more selling. We could have red bars, something like that, and then maybe a little bit of buying. Right? It could kind of work out like this, where it starts to just go back and forth. Right? We could see a red, green, something like that. That's kind of what I'm expecting, more of that than immediate buying, because there's a lot of fear in the market right now. I'm kind of expecting this, to be honest with you. But another thing is, if we get that and prices stay towards the bottom of this bar, the next possibility after that could be the next leg lower. That's a distinct possibility too. And we really enter, if that happens, then I believe we would be entering a more likely scenario of a more prolonged bear market. Okay. If, however, let's say we get some selling in the beginning of the week or something like this. Let's say the first 3 days look like this. And all of a sudden we get a wide range green bar, or we get that topping tail bar like I was talking about. That would be a more clear indication that at least in the short term, buyers are at least willing to step up at this time, at this price. And if that does happen, then, let's say we start seeing some of this, okay? Maybe we get a wide range bar, or again, maybe another topping tail bar here, or bottom tail bar. We start getting some of this, okay? That would be more of an indication of the bottom is near. And if we actually get kind of a strong move up, let's say later in April, and then we get some selling, right? This would be constructive if we actually get this, and we put in a higher pivot low, right? Something like that, right? That would indicate to me that we've got the low, and then we've got a higher low. That would be very constructive for prices to move up, okay? And that would be an early indication that this bear market is losing selling pressure. So those are the future forecast I see. Most likely I see some sort of back and forth price action down here, something like this. Okay, that's kind of what I see. Again, a break lower, major break below that would indicate more of a prolonged bear market. Now, having said all that, I know that was a lot, but let's go to a little bit. I'm going to go to these monthly charts. I think this will be helpful to you guys. So that's the SPY. Now everything kind of follows the market, right? Kind of like follow the leader. So let's look at a longer term monthly chart of 5 major markets. We're going to start with the S&P 500 SPY. And you could see this was December, January. Price really didn't go anywhere. Inside candle, inside bar with a weak new high, and then we rolled over, right? Remember, each bar here is a month. So January was clearly a red month. December was a weak month. March was a month of selling. And then now April, we continued the trend, right? We continued this trend to the downside, right? So the trend is down. So when the trend is down and you trade the way I do, you either have to stop trading or you have to really watch what you're trading, be selective, and reduce risk. That's what I've done. Now, one reason I think this market is potentially going lower, at least in the short term, is we've broken any support that was in here underneath of this bottoming tail candle. This low so far in April has undercut that. The next major area of support is going to be at the, around 500, so just below that, because that's an even number. That kind of matters emotionally. But if we break that 500 and start getting towards like 480 or whatever, 475, the next major area is going to be down here. It's going to be around maybe 425, okay? And no, we don't want to install anything right now. So those are the levels I see that matter. 500 matters. I think 450 to 425 may matter if this becomes a more prolonged market. This would be major support at 400. Or in the S&P index will be about 4,000. Okay. So those are some levels to watch here in our upcoming forecast. Right now, clearly the sellers are in control. Buyers are not stepping up. It's just kind of a run for the exits type of market. So now let's just look at the other ones, because this is broad-based selling. This is in the S&P 500. This is in the NASDAQ or the QQQ ETFs, right? Same picture. You know, weak highs, weak new highs, and then selling in January, February, and March, and now into April. And we can see the volume increasing as price goes down. So this is a very bearish market. Let's look at the Russell 2000 small cap index. The selling in this actually started sooner. So small caps have clearly suffered over the last 5 months. And the next major level in the small caps is around 161.5. So it looks like that's where we're headed, and that's another case for a continued bear market. The Dow Jones Industrials is measured by this ETF DIA, or the diamonds. Again, the next major level, we're at that level now, around the 375 area. Next major level in that will be around the 330 area, 335. So that is so far continued selling in April. And finally, the last major index I watch is the transport index as measured by this ETF IYT. This index also was selling off sooner than the top two indexes, but clearly December, January, February, and then March, another breakdown under this support area. So you can see that pretty clearly, right? That's a very clear support area right there that was broken. And now we're trading below that. We're trading below this area. Looks like transports are at least going down to, this area below 50. Right now we're at 56.76. So that is the upcoming forecast, and anything can change at any moment. Now, again, what is a trader to do? Well, take a step back and just look back at what you've traded. It's a good idea to take screenshots. At least on my computer, that's what I do. It's real simple on a Microsoft computer. You hit the Microsoft button on the left side, lower part of your keyboard, and you hit print screen on the top right of the keyboard, and you can take a screenshot. And then you can go back and you can annotate your own charts. I'm simply using an annotate app or annotate extension to do that right now. So do that. If you've had a bad trade or even a good trade, go back and study your trades. That's some early advice that I got that really helped out. Now let's look at quickly. Let's look at the watch list of our major ETFs, because this sell-off is so broad that it's affected nearly every part of the market. Now there still is some individual stocks that are doing okay, but even this week on Friday, some of my major stocks like Cardinal Healthcare broke down. There was another stock I own in gold. I believe in gold and silver broke down this week. But if we look at these ETF lists, I think you'll see there's not a lot of places to hide. Bitcoin is broken down over the last, kind of giving us this pattern of, we have this high, next step down, and this could go either way, right? This could go down or up in Bitcoin. If we already looked at these other major indexes, here is the VIX, or the fear index, right? Fear is up at 45. That's really, really elevated for the VIX. I mean, like over 20 is elevated, 30 is really high, but 45 is a really elevated, almost an extreme in the VIX. So that's why this could be kind of nearing the end where the market kind of flushes out anybody that's really weak in the market, and then what's called the weak hands and the strong hands. A lot of times the strong hands will come in and start buying at these lower prices. But mid caps, same picture. Small caps, pretty much the same picture. Even energy, which was holding up, I had 2 energy stocks, so it's broke down this week on Thursday and Friday. So you can see this. The selling has now entered the energy space, which was holding up really well until Thursday and Friday of this week. Now the financial sector also broke down this week. So there's definitely some broad-based selling on even areas that were holding up, like energy and financials. Consumer discretionary still going lower. Healthcare even broke down on Friday. Again, that's a defensive space. That was really unexpected, actually. Technology has been leading the way down. Utilities even had some selling on Friday. Industrials continued selling. Materials sector was kind of holding up, but kind of gave it up and rolled over and dropped Thursday and Friday. Communications continued selling. And even consumer staples had some increased selling on Friday. Now, will this turn around this week? It could. Staples has been holding up, and some of those companies in there actually don't look too bad. And real estate also, which was also holding up, had some serious selling on Thursday and Friday. So we're getting broad-based participation in the selling. The dollar index the dollar has been sold off. And Friday we had a turnaround candle or turnaround bar or reversal bar. We'll see where that goes. I don't invest in the dollar, but I just watch it. And interest rates are continuing to fall. We're now below 4 on the 10-year interest rates, which indicates that we've got a weak economy. Is what it indicates. So that's where we're at. I didn't see even insurance. I talked about insurance last month. Even insurance. The selling even came into the insurance. So I had a couple insurance stocks that failed on Friday. So even that area of safety, insurance, financials, and energy, we had selling this week. It's just one of those markets that it's not conducive to the way I trade. Let's see about gold, silver, if I can show you guys that. So gold miners, I own a position. Gold miners, that was sold into on Friday. Thursday looked like this gap down reversal, like that was just going to continue to hold up. And even gold miners gave up some gains on Friday. Gold itself, some selling Thursday and Friday. Silver sold off Thursday and Friday. And then copper also has been weak Thursday and Friday. Even commodities like corn, corn is kind of holding up because it's something that's needed. But that was sold, in February into March. Oil, these commodities have also been selling off too. So you see these gap downs Thursday and Friday. Oil was sold too. So there's just nowhere to run to, nowhere to hide type of situation. Now, let's get back to my agenda so I don't get too off track. And I think you guys can probably see that, when it comes to the emotions of the market, right? Money is neutral, but people operate on emotions. So how do we use that to our advantage? Well, we can see it in the chart, and I think I just showed you that where the fear right now is in the market. So when there's fear in the market, let's use that to our advantage and just take a step back. If you're a contrarian trader, this is a great time. And we could get a snapback rally too. That's another possibility. I talked about the market's not working. But this is a great time to study all of this stuff and start to formulate a plan for yourself if you have not done so already. Get your budget together so you have some money to invest with, right? You have some money to trade with. And so let's get to now a few stocks that are still holding up. So if we look at our watch list, let's see if I can get to my single stock watch list for you. So there was a few that held up. And if I go to here, excuse me, I get water. I go to here. I'm just going to scroll through this really quickly till I get to a few of these stocks that are holding up still. This mortgage company, United Wholesale Mortgage, is in this bottoming pattern. So we had a low here, This back and forth price action. We're still below all the moving averages, so this is not a trade recommendation, but this could be the low in this one. Because Wednesday, we put in a wide range green reversal bar. Then we had a topping tail red bar. And then on Friday, this had a bottoming tail with a green candle closing Friday. So a little bit of relative strength in that on Friday. I would not have trade or invest in it right now, but that's one to watch. That sold off. UPS leading the way lower. Pfizer broke down. Yeah, this was one that I would continue to watch too. Cardinal Health. This has had a lot of relative strength lately. And I believe that Cardinal Health is just a victim of the market at this time. It's just being sold for the sake of being sold, and broke down, gap down, closed down Friday. This is one I would watch to see if it reverses higher in the first couple days of this week, because that was working pretty good. Cardinal Health. Uber broke down Thursday and Friday, so Uber still want to watch. AT&T had a lot of relative strength until Friday. Again, I think this is just a victim of the market environment. So continue to watch AT&T if that can turn around. DoorDash is still very popular, but in a downtrend. This has showed some relative strength. This Curiosity Stream, probably consider a penny stock under $3. But if this can form a higher pivot low, right, compared to this area, this is one to watch. All right, so we have this low, we had this kind of breakout pattern, pulled back, we had earnings, and it kind of shot up from earnings. If this can turn up here as a higher pivot low, I think that's one to watch. Curiosity Stream. CVS, I have a position in CVS. Again, I think more of a victim of the market. This had great relative strength through all the selling. And then Friday had this igniting bar lower, but it hasn't broken here. We haven't filled the gap yet. So this may take a few days to play out, but that's definitely one to watch. CVS company. Gold miners broke down Friday. So if this can snap back on Monday, like a green bar or something, or a bottoming tail bar, or even an inside bar followed by another pattern to watch for would be something like this, an inside bar, and then maybe a bar here that goes higher. Okay, that's a pattern to watch for on that. Celsius also showing some great relative strength, symbol CELH. Right, we had good reaction to earnings, kind of this area here, then broke out and moved higher. This is still, it's under pressure right now because of the market, but if this can kind of maintain this area, I like CLH going forward, CELH, Celsius. This is an energy stock that broke down on Friday. Again, had a lot of relative strength in this market and then just kind of gave it up on Friday. We'll see if that can turn around quickly. This insurance company, HCI, had, again, great relative strength after earnings, but sold off Friday. If this can reverse quickly, I like that too, HCI. And this is Alignment Healthcare, symbol ALHC. And we have this kind of move up after earnings. Has shown great relative strength. So there's a few ideas for you guys to watch or consider. Finally, one more stock. And this will be the last chart. Let's see if I can find that company. This came on my watch list. I forget where this idea came from, but I was searching through stocks over the week and I was using some different parameters. Now this wasn't a fluke because I started using a few different parameters on penny stocks to get an idea of what could be moving up next, what could be the next big idea, right? Let's see if it's in this list. No, it's not. It should be in that list. It's not. Let's go to... I apologize for this. I wasn't ready for this. This week's list. It should be towards the end of this week's list. Let me see if I can find that symbol. It's the next page. So this will be the chart and the company I want you guys to study. If you're serious. If you want to be serious about stuff, then you really have to put in some homework. This one. AREB, okay? American Rebel Holdings. I'm just going to click on that. Okay. I'm going to go to, now this is just a summary page, right? It shows the name of the company. It shows the name of the, right, the stock symbol, AREB. It shows that it trades on the NASDAQ. It shows some post-market information. And then it shows some basic information here, right? Previous close, volume, average volume, the 52-week range of the stock. It gives you a small chart. And then, a business summary, right? So about the business. And then it gives us some basic fundamental information, earnings information. I like this area here where it shows related stocks. It shows the symbol and a 3-month change, okay? And we can see there's nothing here to really look at. Over 3 months, it hasn't outperformed anything. So that's not the clue. I don't pay attention to the key turning points on this. I never use that. And I never care what an analyst rating is. But one interesting thing about this company, it has one buy. There's only really like one analyst out there following this stock. There's no earnings estimates on this. So nobody's watching this stock, okay? And then there's some news, right? There's just news stuff about the company. So your homework for the weekend or this month is to look over this company, look over all the information that you can find. And let's go to a full chart and look at the chart. What do you see on the chart? And next month, I'll reveal to you why and how this came up on my list and why it seemed like a potential opportunity to take a trade on this week. So this is a 5-year monthly chart, okay? We can see over the 5-year period, right? It's sold off. It's went flat as a board. In fact, it just made a new low in April. So why would I try to trade this stock? Okay, I want you guys to look for clues on that and see, what am I looking at? Why in the world would I trade this junk? Because it looks like junk, doesn't it? Well, let's go to a smaller time frame chart. I'll give you guys a few clues, okay? So here's a weekly chart. Here we see the past 2 years. Each bar is a week, okay? So one clue why I started looking at it is where? We've got earnings information. How about this? How about this volume? There's a clue. How about that for a clue? Average volume on this is like, for sure, under 10,000 shares. And then it kind of started to come up. Maybe get up towards 100,000 shares. And then this week, we had over 33 million shares traded in the stock. So that's a big clue. That's one clue. why it came on my list. And finally, let's look at the daily chart. So what do we see on the daily chart? We see right, long-term downtrend. We've got the medium trend down, right? So we got long, medium. Even the short-term trend is down. So the question came into my mind: why is somebody or some operator or some mutual fund or some hedge fund all of a sudden putting their money in this stock? That's why I started looking at the stock. Why would somebody even consider this? There's no real fundamental or technical reason that I could find at this time, other than one. I found technical reasons here to possibly take a position in this stock. Right? We had a breakout, we had an inside bar, and then on Friday I almost pulled the trigger on this. I didn't because it was such a huge gap. It was like at the open it was like a 50% gap, right? This thing on Friday, pre-market, was like a 50% gap up. Right? All of a sudden it went from here to here at market open and just was bought up the rest of the day. And for me, that was too far, too fast. So I'm not saying take a position in this stock. What I'm saying is study why this happened. Why did this happen? There's a technical reason for it, which I kind of already gave you, but there's also a fundamental reason for it, why I think that happened. And it's going to be somewhere in the pricing information. It's going to be in the fundamental information. Okay? It's going to be in this area. This is the last clue I'll give you. It's going to be in this area, in the fundamental information. Okay? It's not because they're making money either. I'll tell you that right now. So that's it for this month. That's a chart and a company to study. Study the fundamentals. Why would a stock gap up 50% and close up in one day 392%? Okay? That's your homework for this month. I thank you for watching, subscribing, being a loyal follower, and being and if you share this channel with others that find this information helpful. Again, this is Laptop Trader, and please protect yourself at all times, as I always say. Again, the contact for me is laptoptraderphil@gmail.com if you have any questions, and we will see you next month. Goodbye.